Opening welcome to the Japan Market Brief podcast for March 25. Today we are looking at a strong rebound in Japanese equities, why the move happened, and why Toyota stands out as the stock to watch. Today's headline: Japan's market posted a sharp bounce today as investors pulled back from the worst-case oil shock narrative tied to Iran and the Strait of Hormuz. That shift in tone was enough to bring buyers back into the market after several highly nervous sessions. Market moves: the Nikkei 225 closed at 53,775, 81 up 9% on the day. Topics rose 4% to 3,833. Dollar yen was relatively steady at 158.67, up just 1%. The S&P 500 was flat in the latest stored session, while the U.S. 10-year yield stayed elevated near 4.39%. So this was not a move driven by a big drop in U.S. yields or a major yen reversal. It was mainly a relief trade. The market saw signs that immediate geopolitical escalation might ease, and that was enough to support a broad rebound in beaten-down Japanese names. Oil and geopolitics: this part is important. The recovery in stocks does not mean the underlying issue is gone. NHK reported that New York crude futures saw sharp swings again, and Japanese policymakers and industry groups are still openly discussing the economic impact if the Iran situation drags on. That means today's rally should be read carefully. Investors were willing to buy the dip, but they were buying into a still fragile macro backdrop. If oil spikes again, the mood could reverse quickly. FX and policy sensitivity: dollar yen stayed near 158.67. That is a relatively modest daily move, but it still keeps the currency in a sensitive zone. The market did not treat yen intervention risk as the main story today, but it has not disappeared either. If the yen weakens again while energy prices rise, Japan's equity rebound could face another test. Stock to watch: Toyota is the clearest stock to watch today because it captures both the near-term risk story and the long-term investment story. First, NHK reported that Toyota will cut output of vehicles bound for the Middle East by about 24,000 units again in April. That tells you the logistics damage tied to the Hormuz route is still having a real effect on industrial planning. Second, Toyota announced about 160 billion yen of investment in U.S. plants, including Kentucky, to strengthen hybrid vehicle production capacity. That is not a defensive headline. It is a growth and allocation headline. Third, Toyota Group also said the tender offer toward taking Toyota Industries private had succeeded. That gives investors another signal that the group is willing to push through larger structural changes for the longer term. Why Toyota matters here: Toyota matters because it shows how Japanese blue chips are navigating a market that is being pulled in two directions. On one side, geopolitics, energy prices, and shipping routes create short-term disruptions. On the other side, companies still need to invest, restructure, and protect future earnings power. If investors continue to favor large, liquid names with visible strategic narratives, Toyota remains one of the strongest examples in the Japanese market. What to watch next going forward? There are three things to watch. First, whether the relief in oil prices and Middle East headlines holds. Second, whether the yen remains stable enough to stay out of the center of the story. Third, whether today's rebound broadens into a more durable recovery or fades as a short covering move. For now, the best reading is that Japan's market moved from panic to selective risk-taking. That is a better tone than yesterday, but it is not yet a clean reset. Closing that is your Japan market brief for March 25. Japan stocks rebounded hard, but the move still needs confirmation. And among large-cap names, Toyota remains the most useful stock to watch as the market balances geopolitical stress against long-term industrial repositioning.